Opendoor has closed one of its most remarkable weeks in years, and the stock market has taken notice. On Friday, shares finished the day at $5.01 per share, up nearly 40% in a single session, marking the company's highest close in 3 years. After hours, the stock added another 19 cents, hinting that momentum could carry into next week. For retail investors who have been pushing this story forward, this moment isn't just a financial milestone. It feels like validation, the payoff for weeks of conviction, community, and cultural energy. But this story isn't only about a number on a screen. What's happening with Opendoor right now may be bigger than a rally. It could be a preview of a new type of company altogether, a hybrid that fuses technology, retail activism, and cultural influence into something the market hasn't quite seen before. In many ways, Opendoor might be pioneering the path toward becoming the first retail-engineered tech giant. For much of market history, retail investors have been dismissed as small fish. Analysts and institutions often frame them as noise, unpredictable, emotional, lacking discipline. But in 2021, the GameStop saga revealed a different truth. When retail investors act collectively, when they harness culture and community, they can move markets. With Opendoor, that lesson is being taken one step further. Anthony Pompliano has described retail investors as a decentralized hedge fund, a hive mind of individuals pooling their intelligence and conviction to influence not just the price of a stock, but the direction of a company. He's even compiling shareholder suggestions to submit to Opendoor's board, a real example of retail activism becoming retail governance. At the same time, retail leaders like Eric Jackson are using stunts and humor to keep Opendoor in the spotlight. His 3-day campaign outside Drake's mansion in Toronto, holding a sign urging the rapper to invest $100 million into Opendoor, might have seemed like a gimmick, but it landed him a spot on Fox Business, where he repeated the pitch and got the hosts laughing. That moment wasn't just funny. It was effective. It pushed Opendoor deeper into the cultural conversation, making it a name people outside of finance were suddenly hearing about. This is what makes Opendoor unique. It isn't just retail money buying a stock. It's retail energy shaping perception, strategy, and culture. In the process, Opendoor is becoming a company whose identity is being co-created by its shareholders. Of course, retail energy alone isn't enough. It has to meet a management team that's willing to listen and adapt. And that's exactly what has happened under acting CEO Shrisha Radhakrishna. In a candid post to investors and customers earlier this week, Shrisha declared that artificial intelligence will be a core primitive of Opendoor's future. He admitted that a year ago he wasn't convinced AI was ready for real work with real money at stake. But now, he says, the evidence is undeniable. Tools like Repair Copilot, RiskAI, and the Key Agent app have been built in days or weeks, and they're already driving efficiency and strengthening operations. This isn't hype, it's practical application. By cutting compute costs and focusing on lean, fast-moving teams, Opendoor is building technology that makes its model more scalable, less capital-intensive, and more attractive to investors. And in doing so, Shrisha didn't just talk to analysts or bankers. He spoke directly to retail investors on X, acknowledging their role, praising their ideas, and positioning them as part of the company's journey. That's unusual. Most CEOs keep retail investors at arm's length, focusing on institutional money. Opendoor's interim leader has flipped that script, making retail part of the story and AI part of the strategy. It's a potent combination. Eric Jackson's Drake stunt underscores a deeper truth. In today's markets, attention is capital. Keeping a stock in the headlines, on social media, and in cultural conversations is a way of attracting liquidity and conviction. When Opendoor trends on X, when clips of Fox Business interviews circulate, when memes spread, it keeps the stock alive in people's minds. This isn't just about memes for the sake of memes. It's about creating a feedback loop where cultural relevance drives financial flows. When people are talking about Opendoor, more traders take notice. When more traders buy in, the stock moves higher. When the stock moves higher, media attention increases. And when media attention increases, the cultural loop repeats. Few companies are able to harness this dynamic. GameStop did it for a time. Tesla, in its own way, has done it for years. But Opendoor may be the first company where the cultural narrative is being deliberately engineered by retail leaders and embraced by company management at the same time. That's new. That's powerful. Another piece of this puzzle is the possibility of institutional involvement. Reports have surfaced that Eric Jackson has been in conversations with Korean institutional investors about a potential stake in Opendoor. While nothing has been confirmed, the fact that these discussions are even happening matters. Institutional money brings stability and credibility. Retail can drive momentum, but institutions provide depth. If Opendoor can bridge those two worlds, retaining the energy of retail while adding the resources of institutions, it could create a capital base that's both dynamic and durable. That's not something most meme-era stocks manage to achieve. If Opendoor does, it could set a precedent. All of this is happening in a macro environment that finally looks supportive. Jerome Powell's comments at Jackson Hole were the clearest signal yet that rate cuts are coming in September. For housing, that's transformative. Lower mortgage costs will attract more buyers, more sellers, and more activity. For Opendoor, that means more transactions, more revenue, and a more fertile environment for its asset-light, AI-powered model. Timing is everything. A few months ago, Opendoor was fighting uphill against high rates and a frozen housing market. Today, with the Fed shifting, the wind is at its back. That's why the stock has surged to $5, not just because of retail stunts or AI headlines, but because the fundamental backdrop has improved in ways that matter. So what does this all add up to? It adds up to the possibility that Opendoor is writing a new blueprint for how companies can grow. Instead of relying solely on institutional analysts and big funds, Opendoor is harnessing the creativity, conviction, and culture of retail investors. Instead of sticking to an outdated business model, it's pivoting toward AI and technology to become more scalable and efficient. And instead of shying away from attention, it's embracing it, even when that attention comes from viral stunts and jokes about Drake. In other words, Opendoor is showing that a company can be retail engineered, AI-powered, and culturally amplified all at once. And that mix could create a new kind of tech giant, one that doesn't look like the Apples or Googles of the past, but something born in the social media age, where culture and capital merge. The big question is whether this momentum can last. With short interest still high, the potential for a squeeze is very real. With institutional investors circling, the possibility of deeper capital support exists. And with crypto integration still being whispered about, there are even more layers of speculative upside. Skeptics will argue that this is just another meme stock moment. They'll say that AI is overhyped, that retail will lose interest, that housing is too volatile. But Friday's close at $5, the highest in 3 years, suggests otherwise. It suggests that this movement has depth, that it has staying power, and that it is tapping into something bigger than just a trade. As we head into the weekend, the takeaway is clear: Opendoor is no longer just a stock. It's an experiment in what markets can become. It's a test case for whether retail can do more than speculate, whether they can help build, guide, and reinvent a company in real time. And with AI, cultural attention, and macro tailwinds all aligning, Opendoor might just be at the start of its most exciting chapter yet. Closing above $5 is cause for celebration, yes. But it's also a marker of what's possible. If this is what a retail-engineered, AI-powered, culturally amplified company looks like, then Opendoor could be the first of its kind, and maybe even the blueprint for the future of investing.